Hi everyone, welcome to the Christmas Eve edition of this week's midweek market update. I'm Ashley Rosser with Victory Fiduciary, and today the theme is ho ho, here comes the stimulus. And so we know that the market has been eagerly awaiting to find out what type of stimulus package will be passed and brought forth for its people, and so we finally got to see what stimulus package was actually approved and was going to be sent in to be fully voted on. And so this package is significantly slimmed down from what we were expecting, or maybe if we were expecting what we saw back in the spring. We saw specifically the direct payments to people being cut from $1,200 down to $600, as well as less unemployment benefits were going to be offered. And I think a lot of people are pretty surprised to see the amount of other stuff that has been put into a COVID relief bill, and so there's still kind of some back and forth, and there's some disappointment just in general. And so for the markets themselves, it'd be interesting to see if this is really going to be enough for them to kind of continue on with their momentum. Markets have been really hungry for stimulus, really hoping that we would get that same amount that we had before, because that really did help to kind of lift the markets up temporarily. And so while this is something, it is certainly a much less generous package that was originally passed back in the spring. And so it'll be interesting to kind of see if markets are disappointed, because markets have been pricing in kind of all along that we were going to get a stimulus program and that it would probably be comparable to what had been received before. And so it'll be interesting to see just kind of how that happens. But what I want to talk about is we really have a tug of war dynamic kind of happening right now, just within the market itself. And so this is the S&P 500, just going back 1 month's worth of trading. And you can see we've really been trading sideways. Not a whole lot of action going on. Past couple of days we had some slight negative returns. Market does have a little bit of lift to today, so this was just taken today. So, but really just been kind of trading sideways. Remember we talked about sloppy trading was definitely something that we could expect early on in December. And so markets have been fairly muted, especially this week. And so there's this kind of dynamic going on where, you know, we get good news and then we get bad news. So today we found out that another 800,000+ people filed for first-time unemployment benefits last week. So these numbers are remaining significantly elevated. These numbers have also ticked up from where we were back in the early fall. Markets are also, right now, for now at least, kind of discounting the fact that President Trump did say last night that he would not sign the bill for the stimulus, that he saw that it has to go back and be reworked, and that he wants additional payments being paid out to Americans directly. And so for now, the market seems to kind of almost be ignoring that, at least for today. And then also on Monday, the S&P 500 had a big day. Tesla joined the S&P 500. Congratulations to Tesla. But one of the things that happened with that is that anytime a new company joins an index, selling has to happen to make room for the new company that's coming in. So we did see some volatility on Monday. I wasn't surprised to see that, because it really has a ripple effect across all of the major indexes when that happens. And so we absolutely saw that play out on Monday. But again, Tesla was added on Monday. And then, you know, we have this dichotomy where COVID cases are soaring. We're seeing increased lockdowns both here and abroad. I know England is really implementing some strict restrictions right now, especially coming into the Christmas holiday. And so we're seeing that play out within the states as well, as some governors are having to kind of tighten things up, trying to get control of these numbers. But then at the same time, we have vaccine rollout that's happening right now. So you see there's this constant tug of war between bad news, but then is this good news, and kind of balancing things out. So for now, really, I would say that things within the market have been really quite, there's really been not a whole lot going on to talk about. And so we'll have to see then what happens for the last part of the month. And so we've talked about the Santa Claus rally for the past few weeks. And so what the Santa Claus rally typically entails is the last 5 trading days of the year, and then the first 2 trading days of the new year. And then typically we do see an uptick in prices do rise. And then depending on that Santa Claus rally, we can actually extrapolate what we might be able to expect for the next year. So we'll get into that a little more next week. So I just wanted to show you this. Also, volume has been fairly light for this past week. One thing, though, that I did want to show is again, despite the fact that the market's really been trading sideways, there have definitely been some areas of the market that have been outperforming. And again, just to kind of show you, remember, we don't invest across the board, regardless. We're very specific and tactical in the areas that we choose within our portfolios. And again, you hear me say all the time, I'm choosing areas, or we as an investment committee are choosing areas that have strong relative strength, have strong momentum, and we are steering away from those areas that are negative because they will have lags in our performance. And you can see this play out very nicely. So you can see here, this is going to be the S&P 500, this orange line right here, which has really done a whole lot of nothing. And this is actually going back, this is just 1 month numbers. And here's the model right here. So this would be a hypothetical model of our tactical model using funds that we currently invest in for our clients. And you can see that despite the S&P being either negative or flat, being able to find those areas, kind of like those gems, can really help to increase performance over the long run. And so that's what our goal always is that take what the markets will give us, but we want to find those areas that are going to give us the best potential for long-term performance over the long run. And so that's just kind of thought a neat way of how that plays out. And so that really is all that I wanted to get into. It's going to be a light trading week. Tomorrow the market's only open half day. It's going to be closed then on Friday. And so we'll see what kind of happens next week. Hopefully we're going to get some updated information just with the stimulus about whether it's going to be able to move forward. And I think that the market may be kind of sitting back waiting to kind of see what happens with that, because remember, we've been pricing in all along that we'd be getting additional stimulus and that it would be probably close to those numbers that we saw in the spring. So we'll have to see what happens there. And finally, we really do want to wish everyone who tunes in every week, our clients, a very Merry Christmas. I hope that you have a joyous time with your family. I know this year has looked very different from years past, and it's likely that as you get together with family, it will look different. But we do want to let you know that despite the challenges that we have experienced through 2020, we're glad that you came along for this ride with us. We're thankful for you. We do cherish the relationships that we have with old and new clients. You become friends in our family, and so we are so appreciative of you. And again, we wish you a very Merry Christmas. Thank you so much. We'll see you next week.